Welcome to today's market report.
Global shares edged higher on Wednesday on the strength of US equities markets that were boosted by rising oil prices and positive economic data out of the US. US factory production data showed that manufacturing was strong in August, despite a slowdown due to closures related to severe storms and the ongoing microchip shortage. Earlier in the day, US import prices for August declined for the first time in 10 months. That followed Tuesday data from the US Labor Department, showing that inflation cooled last month and may have peaked. US oil rose by more than $2 on Wednesday after stockpiles fell last week to their lowest since September 2019. The MSCI All Country World Index gained 0.26%, and all three of the major US stock indices closed higher. The Pan-European Stock 600 index closed down 0.8% after UK data showed that inflation hit a more than 9-year high last month. Investors are waiting the US Federal Open Market Committee's monetary policy meeting next week for what the Fed will announce regarding its bond buying program and when it will begin tapering. Risk markets in Europe and America are trading in a subdued fashion ahead of next week's FOMC meeting, with economic data failing to boost conviction in the reflation trade at the moment, according to ANZ. The Dow Jones was up 0.68%, the S&P gained 0.85%, Nasdaq added 0.82%. Possible increases to the US corporate tax rate remain important in the background, and one bank estimated that raising the corporate tax to 25% could shave 5% off S&P 500 earnings in 2022. We still have a very fragile market, especially if we get some type of tapering from the Federal Reserve. According to Aptus Capital Advisors, any material change to tax policy can create a more volatile market. Data out of China showed that factory and retail output and sales growth hit one-year low in August, as fresh COVID-19 outbreaks and supply disruptions pointed to a possible economic slowdown on the mainland. The yield on 10-year Treasury bonds was up 2.3 basis points to 1.302% after earlier touching a 3-week low of 1.26%. US crude settled up 3.1% at $72.61 per barrel. Brent ended 2.5% higher at $75.46 per barrel. Spot gold dropped 0.8% to $1,790.56 per ounce. Gold futures fell 0.68% to $1,792.40 per ounce. On the FX front, the GBP/USD printed a fresh daily high during the American session at 138.53 and then pulled back towards 138.20. It is hovering around 138.40 in positive ground for the day. Cable continues to move sideways with support around 138 and unable to confirm levels above 139. UK Prime Minister Boris Johnson made changes to his cabinet. Liz Truss will be the Foreign Secretary and Dominic Raab will be Justice Secretary. Robert Buckland, Robert Jenrick and Gavin Williams will leave the Cabinet Office. Earlier on Wednesday, economic data from the UK showed higher than expected inflation numbers. In August, the CPI rose 3.2% year on year. The next focus for GBP will be tomorrow's release of August retail sales. This is expected to bounce by 0.8% month-on-month after the minus 2.4% month-on-month plunge registered in July. That number prompted a speculation that much of the lockdown-related pent-up demand in the UK has run its course. Tomorrow's data will likely be key in setting that tone ahead of the 23rd September BOE policy meeting, according to Rabobank. The euro-dollar is edging higher during the American session, trading at 118.10, up a decent 0.07% on the day. Earlier in European session, the single currency printed a daily high at 118.31, but retreated its gains, returning to the 118 area. The market sentiment improved, with the major US stock indices rising. The dollar index keeps weakening across the board, falling 0.14%, sitting at 92.53, despite the rise in the US 10-year yields at 1.31%, up almost 3 basis points. In the European economic docket, the industrial production rose by 1.5%, better than the 0.6% increase forecasted. ECB's Schnabel commented that the markets might be overestimating risks to global growth from the spread of the Delta variant.
This is today's market news. Thanks for listening. We'll see you next time.